appreciate y'all. We appreciate you taking your time this afternoon to join us. We're really excited about this session on insurance that we're presenting. I'm Alexis Boland. I'm the 2023 Education Chair. With us online is Catherine Sakas. She's the Vice Chair of Education for Women's Council. I see several of our education committee members here online, so wave so we know who you guys are. They worked extremely hard at putting together this and other events for you, and we are definitely excited about this event. Before I ask our Madam President Charmaine to say a few words, and then Catherine will introduce Cyndee. Since there's so much jam-packed information here today, it's going to take a while to get through it. Post your questions in the chat, and we will be watching your questions. At the end, Cyndee will answer your questions, but we really want her to get through all the information so that she doesn't get bogged down in answering questions and doesn't get through this very valuable information. We may run a little over if we got a lot of questions, so I'm asking you to hang with us and let's learn here, because this is an exciting program. So Ms. Charmaine, President Charmaine, would you like to say a few words?
Okay, yeah, for a minute. Good morning, everyone. Thank you all for being here as part of our educational series, Learn More to Earn More. This is one topic that is very important to us as realtors. So I just want to thank our education team, Alexis Boland, Chair, Catherine Sakas, Vice Chair, and all the members of the education team. And I personally want to say thank you, Cyndee. Thank you, Cyndee, for presenting this topic, for being a part of Women Council, for being our ARPAC ambassador, for being a wealth of knowledge to our association. And what I ask each and every one of you on this call, session, Zoom, each and every one of you to go out and share with one person what you have learned today and invite them for our next session. So again, thank you very much, ladies, and thank you all for being here.
I do want to say that we do have members of our state line on. I see that we have our president-elect, Denora. We have Natalie Derrick, who is our, I can't even think this morning, our first vice president, and Denise, who is the current treasurer. So we really appreciate the support of the state line. Catherine, I'm going to turn this over to you so that you can introduce our guest speaker today.
You got to unmute, Catherine.
That would be a good idea.
And yes, that would help. It's my distinct pleasure to introduce today's speaker. I have fond memories of meeting her for the first time. In 2020, she was president of Pinellas Realtor Organization, and I went along with two of my board members to meet her and ask her to join Women's Council and help unite both sides of the Bay. To my delight, I found not only a very smart, seasoned leader, but someone with great compassion and drive to help others. The task was to ask, and I'm so glad I did. She did not disappoint. She quickly became my president-elect and then went on to become an outstanding president in Tampa. She jumped in with both feet and became a great resource and mentor to all members of Women's Council Florida, always willing to give of herself and share knowledge and mentor others. She's been giving back to our profession since 2005 and has won many awards and accolades, culminating in receiving Florida Realtors Sales Associate of the Year in 2022, and now in 2023 serves as NAR's Insurance Chair and our own Florida Women's Council RPAC Ambassador. She was recognized by Real Trends as being in the top 0.5% of realtors nationwide yet is most proud of the fact that her business is built on relationships, and today is 95% repeat and referral. She has an unwavering passion for harnessing our collective voice and efforts to drive positive change within our industry and communities, especially around things insurance related. Guided by her parents' teaching, she firmly believes, to whom much is given, much is expected. So I'm very pleased and proud to introduce to you Cyndee Haydon, and I'm especially proud to call her my friend.
Thank you so much to Catherine and Alexis for having me, President Charmaine and the line. I am excited. Anybody that knows me, I borderline on insurance geek, and I hope today that I will be able to share with you the ability to see how to put this in action for yourselves. When we started this, the title probably should be changed because it really, what I've come to realize and hopefully share with you today is, rather than issues, I've outlined the opportunities for you to elevate trust with your clients, for you to guide, lead, and protect them, and for you to act as their key contact and make a difference. And so again, we're going to outline that today, and I apologize up front. It is jam-packed, and I hope at the end, again, you'll have this to take with you. So you'll be okay, now I'm trying to make my screen go. Okay, sorry. So just quickly, I am thankfully the ambassador for RPAC, and President Charmaine has some big goals. So any of you that are not on this call and not yet a major investor, hopefully at the end of this, I'm going to ask you if you got at least $25 worth of value, and I would ask you to highly consider joining us and seeing the difference that you're making. Right now, we have 70% of Florida's Women's Council members are RPAC participants, and we are over half or up to half of Florida Realtors major investors. So here is what we're going to cover. It is a ton. I really want to take you guys through the some things about flood insurance. It's going to get woven in on some changes with our homeowners insurance. We have some good news and some updates with the condo laws. And in the end, I've also put together a social media toolkit that you'll be getting that allows you to customize it in your own name and voice for your own clients. Okay, so this is a disclaimer, which says I am going to share with you my Cyndee Haydon best practices in my business. Every business is unique, so you should listen to your broker, ask your broker, get your advice from your broker. Again, I'm going to update you on Risk Rating 2.0 and some tips you should know, but in no means am I today trying to give any insurance advice or legal advice or broker advice. I'm just a girl selling real estate over here in Madeira Beach, sharing what's working for me, and I hope it can work for you too. All right, so let's get at it. Risk Rating 2.0, it's been out for over 1.5 years, and a couple of things just to kind of still getting questions about. But the thing about Risk Rating 2.0 and kind of comparing it to our homeowners insurance, I was here when Bigger Waters happened, and since 2012 until this got done in 2021, every time I helped a buyer or seller, a buyer, I had to let them know that I did not know how big that flood insurance price was going to be. We've now taken care of all that. In Risk Rating 2.0, it's actuarially sound, the full rate, and we've also made a way for people to get on the glide path over time to get to that rate, so it didn't do what Bigger Waters did and really almost force people out of their houses. Another great change about Risk Rating 2.0 is you no longer need an elevation certificate to get a flood quote. But probably the area I get the most questions about, so just kind of sharing, is prior to the old system, the legacy rate, they just looked at what flood zone were you and what was your elevation. Obviously, as we know, there are so many things that go into risk. And so this was a move to have something more accurate, more actuarially sound, and actually more equitable, because a lot of smaller homes were carrying the tab for bigger homes. But just to give you an idea of, you might look at 2 homes, and I did this recently myself, and I thought, well, one's elevated, one's not. Why are they paying almost the same rate? Things like the cost of the house comes into it, or the foundation type, or how close you are to the flooding source. So again, this is why you want to have a good insurance agent that you work with, because you're going to have questions. Your clients might have questions. And again, I've made the mistake myself of looking at two properties and going, well, they shouldn't be anything alike. And then when I, kind of talk to the agent, it makes more sense. But that just gives you a little feel for the basics there. So here's the part that most people know, but I want to expand on because I just had it happen to me. So with risk rating 2.0, you no longer have to assume a seller's policy. If you did it in the past, you might remember where the seller might argue or their insurance agent might argue and say, well, I only want to do it if I'm going to do all your insurance. And so the second one here is what everybody can do, which is if you have a copy of the current flood policy declaration page, then you can give that to any insurer and they can keep that same rate if it's a lower rate for the new buyer. Okay. But where you want to know about the first option, if you have a buyer paying cash, you might remember that cash buyers have a 30-day wait. The mortgage clause is what allows people to instantaneously get flood insurance. So I recently had a client paying cash, and so it was more advantageous for them to assume the policy and go ahead and keep that savings. So again, the risk rating 2.0 actually provided two ways, and you may or may not have known like what that is, but that is really what that is about. So let's talk about some best practices. So this on the right is kind of what your declaration page is going to look like. Now, this one's for my condo community. So you're going to look though, and what I wanted you to see is the flood insurance declaration page. So that's the paper you're looking at, and it's going to say all kinds of companies. This one says Philadelphia. It'll say something else. At the end of the day, typically, if the coverage is $250 for the building and $100 for contents, you're looking at a flood insurance program through FEMA. Regardless, it doesn't matter. You don't have to figure it out. All you need to do is to ask for a copy of this. So what I do, just to avoid confusion, because I might have an agent on the other side or a seller that doesn't understand, when I write an offer, I actually write into my offer that the seller will provide that within 3 days while we're under the inspection period, so that I can make sure that they can get good quotes. So again, I always keep it in my file. And so that's just a good policy. Also, some people will say, well, I'm in an X zone and the seller had flood insurance, but I don't need it, so I'm not going to keep it, but it's at a lower rate. What I would suggest is have them get a quote. See what it would be if they come back and ever need it, because what we are going to talk about later is some changes with Citizens means a lot of people might have to have flood insurance that didn't have it before, even if you're in an X zone. And the other thing to realize is, again, we're not going to give advice, but I want you to be aware. If your client gets a quote from an agent that says, hey, there's a private flood solution that is more advantageous financially, that's great. However, if they have a discounted rate historically from the NFIP, FEMA's policy, then if you go to private and something happens and you come out, you will go to whatever that true rate is. And again, you can find out by just getting a flood quote. It'll show you what that true rate is. So again, between the two, you just want to be aware, because this year we saw many of the private flood companies cancel based on some reinsurance issues. And again, it fluctuates with the market, but just you don't want to be in a position to advise somebody either, because again, that could be a costly mistake and we wouldn't want to be overstepping or out of our box. All right, another best practice is I, again, work really hard to get a quote on a property as I'm writing the offer or right after, because again, you're going to want to know from a mortgage with interest rates and the buying power being so impacted, I really, really need them to know. And I would highly encourage you to have everybody get a flood quote, because even if you think you're in an X zone and you shouldn't need it, we're going to talk about some changes with Citizens homeowners. And if they end up having to go with Citizens because of the age of the roof or something else, or there's nothing available, or you live at the beach, you're going to have a flood policy. And so again, the cost of ownership and the cost of being able to qualify for that mortgage could really get thrown by the flood. You don't want to be in the middle of a process and disappoint them, impact your reputation, et cetera. So I would say, again, we're luckily a year and a half into it. So a lot of the insurance agents are up to speed, but you definitely want to be working with somebody that knows what they're doing. A fourth best practice is just, again, to know that X is a flood zone. If it rains, it can flood. We saw that with our sisters and the Women's Council in Orlando when we had those rains after Ian. And so we need to, one, realize that our mapping for the FEMA maps are really, they've invested a lot and pretty accurate along the coast and riverines. But again, as we continue to build, as there's less, surfaces to absorb that water, you look at Houston, again, there's nowhere for that water to go. And so when it rises, it becomes flooding. So don't in your mind just think that flooding is, storm surge. Again, rain is a big deal. So if they're not now, they could be in the future. So again, it's just good practices, really securing and peace of mind to really consider it. And then, I don't know if you work with renters. I don't typically, but for those of you in property management or out there, let's not forget them, because again, their safety and their personal belongings, most of them don't even know that they have to get a separate policy for flood. So again, if you deal with people that rent, just make them aware. That would be awesome. Somebody needs to be muted. So under the insurance tips on claims history, when you look at the deck page, there's something up there that says claims. It should not be taken as accurate. So the only way to really know the claims history on a property is the current owner can request that from FEMA. And it's quite a process. You've got to, get a form, sign a form, submit a form. So again, just be aware that at this current time, at the national level, and there've been some legislators we've worked with, we would love to see something like a Carfax for a house and have a house fax. Like, why is that not common knowledge? But currently, there is a law that prevents the government from giving out people's private information. And so there's not a mechanism really for FEMA to do it other than this at this time. The reason I'm sharing this with you and why it's important is because if you or somebody says to a buyer, oh, there've been no claims on this property, and it comes out later it is, again, they could have ramifications on you, the broker, et cetera. And I just like to not be sued. That's just my personal thing. I just try to manage the risk. So I'm sharing from the school of hard knocks of the things not to say and not to do. Also now you need to know that with risk rating 2.0, FEMA is going to look back over 20-year history. So if it's longer than 20 years, it's not going to affect that rate. Now you still, again, I wouldn't get into it, but where we need to start being aware. So in October 2021, when risk rating 2.0 came out, everybody got a clean slate. So until somebody has another claim, then there's this clean slate. But look at our friends down in Fort Myers. Some of those people had claims in 04, 05, and now we had it in 2022. So they are going to have 2 claims in that period of time, and that will come into play. And there is some adjustment. Again, from what I've seen and heard so far, it's manageable. So it's not really to make you afraid, but it is something just to know that, I guess, more importantly, what I would make you aware of is if you know areas that have repetitive flooding, like we have an area called Shore Acres here, just because their rate may be lower right now, it doesn't really reflect repetitive flooding. If they have a claim, if they've had anything in 20 years, it will. And so everybody got a clean slate. So some people got a better rate and a better look in that process. So hopefully that makes sense to you. Okay. A couple other things. People are often confused. And if you work with second homeowners in Florida, which a lot of us do, for FEMA to qualify for primary, they look for a home you live in 9 months of the year or more. That kind of comes up to play in a couple of benefits. One is that you're actually covered for replacement costs. And that rate, if you had you buy a house and a seller had a low rate, say it was $1,000 and it's going to be $5,000 over time, it will only go up 18% a year. And again, the thought was to be able to make a manageable plan for homeowners that had already made decisions based on the information that was available at that time. The reason I tell you that, and be aware, and they should be talking to their insurance agent, is if they live in that house less than 9 months a year, then the coverage from FEMA, even though it says 250 and 100, it is depreciated value and it can increase at 25% a year. So again, just some distinctions to be aware. Again, if you're getting a new house, you're going to have a lot of that information. But I think the confusion I hear a lot of my clients say, they think that it matches property taxes. Oh, I'm in my house more than 6 months, so I'm primary. And when it comes to flood insurance, that may not be correct. So just to be aware. So number 3 is understand there are guidelines for home improvements if a home is in a special flood hazard area. So these are just 2 things that I want you to be aware of. And that is that FEMA has something called the 50% rule. What it says is you can improve or repair your home up to 49% of the structure's depreciated value before you have to bring it into current compliance code. What that would mean is that you would, in many cases, have to elevate, et cetera, et cetera. So that number becomes, again, most of you probably know that. What you may or may not know is it's with the 50% rule within a look back period. So the local government, based on their own floodplain management, the different history, different things going on, what I'm seeing is the local government could have a look back period of nothing to 5 years. What I would say is, again, the one that's more than a year, and you buy a house that's fully remodeled, there could be some things that we'll talk about a little later. So the look back period and the 50% rule are things that are going to be specific to your area. The 50% rule is everywhere. The look back is set by your local government. So the 4th one and is, really we want to be the source of the source. So that is your best plan. And so have an insurance person that can help you with that. But what I would say from my own experience is that buyers are able to make better decisions now because I can show them what the flood insurance is going to cost today. And then if there's any savings, what it's ultimately right now, the true actuarial rate. Even before writing an offer. So if that's not comfortable, then they can make a different decision. We together can find a house that's going to fit their budget. Again, we couldn't do that before October 2021. When you look at a declaration page, and if you haven't, when you're with clients or they're in that process, look at it. It'll show what their rate is, and then you'll see another rate in a savings. And again, it'll show you then what that true rate would be. So in here today, we talked about some learn more, earn more business opportunities. So what again, I would encourage you is be able to help your clients understand some of these things with flood insurance, talking about those options, talking about, hey, getting them connected with somebody that's going to be able to help them and give them really good advice. But, help them get quotes up front, be their hero, and again, be their advocate through the process. We have a thing that says, in Florida Realtors, we have key contacts to legislators. And again, I think there's an opportunity for you to be the key contact for your sphere and act the same way we do with our legislators, educate and inform them, which is what President Charmaine and this committee is all about. All right, so let's move on to Florida homeowners insurance. As we all know, that right now we're trying to balance between the price of insurance and affordability and sustainability. I don't know what you guys are seeing. What I would say to you is if you see and get quotes from your clients with big increases and stuff, if you would send it to me, I will get it to the lobbyists for Florida Realtors. We continue to work away advocating for improvements, but if we can show real world examples, then we can tell stories to our legislature when it comes next year when we're back in Tallahassee. But again, one of the hard parts is everybody feels like it's higher, but it's like, okay, show me the data. So that's where you could really help. All right, so I don't know how many of you know, but Citizens has now changed and added some things in the law really to address two things. One is the lawsuits, and also to make sure people are better protected. So when this went into effect, there were 1.2 million people with Citizens insurance policies. And when we looked at it, there were only about 300,000 that are currently in a special flood hazard area. That means that you right now are helping people that lived in houses. You've helped people live in houses. 900,000 people are going to have to get flood insurance, and it's going to get phased in between January next year over the next 4 years. But as we go through it, you have an opportunity to help people to see what's coming, help them get quotes, and help them understand if that's going to be affordable for them. The other thing that changed is that the law says two things. One is, regardless of what goes on, because Citizens is so undervalued compared to the other insurers by about 40%, nobody gets a decrease on Citizens. So no matter what, your bill with Citizens will be the same or greater. Now, if it's your primary, you have a cap, and right now it is 13%. Going up to 14%. However, they did pass that as of November 1st, so we're right around the corner, they can increase the Citizens renewal rate for non-primary homes as much as 50% over last year's. So again, I encourage you to be having these conversations and be that advisor to help your client get information, because maybe they qualify for someone that's not Citizens if the flood insurance is going to be a big difference in cost for them. Couple other things that are happening with Citizens, just to make you aware. So if they are existing policyholder and another company in Florida or a new company comes to Florida and they give them a rate, they quote them a rate within 20% of what they're paying Citizens. So if you're paying Citizens $100 and someone said, I'm going to cover you for $120, then Citizens would tell you, you need to move to that company or find another company, but not Citizens. In addition, if you go to sell a house and you're looking, and Citizens would have been cheaper, but there's somebody that will do a quote within 20% of that rate, they are going to have you go with that other rate. And, honestly, guys, the reason that is because in Citizens, in effect, we, the tax holder, are the reinsurer. We are the ones that are on the hook for when there's a big claim. And so again, financially as a state, we had gotten down to 500 policies. We are now over 1.3 million policies in Citizens. They did take out about 17,000 last month, but again, we got a long way to go. A couple other new changes in the law that happened recently is they now are going to make it mandatory on all insurance policies that there is a flood notice. They want people to understand that, again, every property has a risk of flooding. And, in Florida, sometimes we definitely get lulled into this, if I'm not in a special flood hazard, then I'm not going to flood. And again, I think you could ask our member Frances what it was like to be rescued from her property in Orlando during Ian, and she will tell you it definitely floods. The other thing that they did was they set up a kind of its own reinsurance pot. Really, the reason is, as we've heard, the reinsurance companies have lost money the last 5 years to the tune of $1 billion. So they're wanting to see us get through a storm session, and they're wanting to see if the changes that the legislature made get held up in the court system, because as many of you know, Florida has 8% of the claims, but we have 79% of the lawsuits. So the reason we're in this crisis, the reason our frog is in boiling water, is because we broke it with fraud and lawsuits. And insurance companies are not built to underwrite for that. So they are, in the backside of this year, we should see people if we have a decent storm season and if the courts uphold it. But this was a way to help these insurance companies stay solvent, so your mortgage would still accept them. Otherwise, they wouldn't. And what that means to you is that the reinsurance part of the insurance bill that you pay is almost 40%. So when those costs increase by 50%, that means your bill would have to go up 20%. So again, just a little bit about how all that works that I've learned over time. Okay, so you're going to get these slides, but if you want to write it down, I created this bit.ly that actually goes to Florida CFO's site with a lot of these laws that are kind of explained easy, because I know it's a lot to take in. I wanted to give you a good way to follow up and get more information if that was something that was important to you. So again, think about it. If 900,000 people living in homes today are going to need flood insurance that they didn't need prior, you probably know some of those people. Again, being the person I have found that helps people understand puts me in a position to them see me as a trusted advisor. And again, we can't change what is. What is. We deal with this every day. We educate people every day, the cost of home ownership, but helping people plan and being part of that plan could create opportunities. It would definitely create conversations, and through those conversations, opportunities to potentially help somebody sell a home and maybe move into something that fits their budget better. But regardless, the impact on them and their family is going to happen whether you tell them or not. So again, why not be there to help them find solutions? So this would be number 2 on our list today of ways to have conversations to learn more and earn more. All right, I got some good news. Who needs some good news? There was a program designed last year called My Safe Florida Homes, and the legislature put $100 million in for mitigation and hardening of homes. They've actually expanded it and improved it. And so this year they put another 100 million in for mitigation, and they actually put 25 million in it to have people get a free home inspection to see if you qualify. So here's what it takes to qualify. It must be your primary, a homestead exempted property. And then the insured value of the structure must be under 700,000, which is good because last year it only went to 500,000. If somebody, if somebody had a home over 700,000, there is a low income exemption. Those people could still participate. And again, you would know if you have someone and can follow up. It's really for homes that are 15 years and older. So if it was built before 2008, because again, if you built sooner, you probably are all to code. Last year, it was only in the wind-borne areas, but now it has statewide availability. So everybody in Florida is able to take advantage. And the final thing is that when the work is done, you have to allow them to come back and make sure they do an inspection. But again, with all the fraud we've had, they want to put the money up and they want to make sure that it's taking place and that homes are more protected and homeowners are living in safer environments. So here are some of the things that you can actually mitigate or harden your homes. And again, I think there's an opportunity for you to be the voice of good news. And for me, I'm sharing this news and then talking about other things that are happening, right? So it's like bring some good news and then bring some other changes that are coming and help them prepare. And some of these may help them be able to get insurance with other people. So roofs are available, garage doors, windows, and townhomes this year are not for roof improvements, but if you have a townhome, you are eligible. So again, the beauty of it is by going to mysafeflhome.com, you apply, they send a free inspector to basically do like a 4-point who says, okay, what would your home benefit from? Here's the good news. You don't have to do it all. Like you could say, I'm gonna do the garage door, even though the garage door, the windows, etc. So here's how it works. You actually have to pay for everything up front, but the state will match $2 for every $1 up to $10,000. So basically people can start getting $15,000 of hardening and improvements and mitigation for $5,000. The other thing is, just as part of this whole program, there's no sales tax on impact resistant windows, garage doors. So again, if you're doing that, not even part of this program, you're going to see a benefit. And then, like I said, what people I'm talking to have done is see what's available. And then before you make a decision, talk to your insurance agent and say, which of these would help my insurance rate, right? Like if doing your roof was going to open up better options over doing the windows, that might be something you should think about before you commit. Here's some awesome news for all the people that helps people that are speaking Spanish. It is on their website, a section totally already in Spanish for those people that would benefit from being able to read in Spanish. So I wanted to make you guys aware. I know our South Florida, I know we have a lot of members that serve the Spanish speaking community. And again, that's a great, great situation. So again, I hope you agree with me. Like there is no reason why you should not be telling everybody you know about this. And again, it's, an opportunity to deliver some good news in an area where we have a lot of news that is, challenging for our homeowners. So that would be another opportunity to have more conversations and learn and earn more. Some other changes that took place, I just wanted to make you aware of. Many of you have told me about how the fact that insurance companies would just cancel somebody's insurance because a roof was a certain age, regardless of whether it was in good condition or not. The law did pass and companies cannot just cancel you based on age. So, but once a roof is 15 years of age, then you will have to have a roof inspection. And if it has more than 5 years of useful life, they cannot deny you solely for that. Now, again, you may have other issues that would come into play, but at the end of the day, many of us know people who are just arbitrarily, your roof is 15 years old, 16 years old, we're canceling you. And so again, I think this is great news for homeowners to at least have a recourse to be able to get a second opinion and then from there understand. So there's a couple unique challenges in Florida. There are things that were done for good reasons that have complicated us. It's funny, even with like the assignment of benefits, it was a really good reason and then took us so long to unwind that because it started being used for fraud. But basically, the law also allowed for insurance companies to offer policies with a separate deductible for the roof. And so again, that, the thing here is your mortgage person is going to have to agree if you have a mortgage. But the reality is there may be some ways to help families stay in their homes and work around an older roof outside of replacing that roof. And so the reason they're saying that is this: what we've suffered from in Florida for the last few years is people targeting roofs and saying, hey, I'll get you a new roof. So the second part of the law addressed that, which said, if a roof, if it's less than 25% being repaired, it used to be they had to replace the whole roof, but now it says, that they can actually do that repair and not necessarily have to replace that whole roof if it's less than 25%. So again, the legislature this year made some big steps forward to try to address the areas that we were having big expenses and big fraud. So these are just two more ways that have been improved. So one of the things to just make you aware as we go into the future, I touched on a little earlier, but again, it's kind of something I've become aware of and I wasn't always aware of, but if a home is in a special flood hazard area, then again, you're working through that 50% rule. And most people know that. The challenge that I'm looking at, or the thing I'm keeping my mind and eye on, and you may want to as well, is I don't remember a time when roofs were so expensive and insurance companies were mandating changing them. And, I know neighborhoods that have a mandatory tile roof. What does a new tile roof cost right now? And if that home is in a flood zone, is that new roof cost more than the 50% value? And if that happens, again, remember, you would have to keep it up, make it compliant with current code. So again, one of the things going forward is as the cost of doing some of these mandated repairs increases and the depreciated value of homes decreases, it's something to keep our eye on. And I think the one thing as realtors, at least for myself, that I'm more aware of now is when I'm helping somebody buy a house and it has a lot of improvements and it's in a flood zone, I want them to sort of check out like what what's left. Like if something happens, talk to the city, find out what's your look back, what's left. Is there any concern? Because like I said, we never know when a storm is going to come through and, even a tree branch. And so what happens then? So anyway, it's something that I don't know has had to be on our radar, but it's something to put in your mind to maybe just be aware of, making sure over time, finding out what your city's policies are, and then, being aware of where things stand. I'm still learning myself, but to give you an example, the city of St. Petersburg has no look back. So people in effect would always have the ability to improve 50%. The city of St. Pete Beach has a 5-year look back. So whatever's been done in that 5 years eats away at the 50% pot of what can be done. And again, we all know people tend to like these remodeled, flipped, happy homes. And again, I think there could be some challenges in the future to just be aware of and make sure as a realtor that you're not putting yourself in a risky position, not understanding any of that for them. So again, the ability to earn more, learn more. Like I said, I think the more that you understand, I live in a county that has 27 municipalities, all with different look back periods. I don't even know them all. I'm trying to learn them all. It is not easy. It is an area, I think, just like short-term rentals, that the realtor community, our GADs, could do a better job at just helping us know where to point people, because we want somewhere to go for the source of the source, not us. And then we've had 2 important updates on the condo law changes. So one, which is great news, is that there was some confusion. If a condo or an HOA had a master flood policy, would a property owner have to buy a second one to qualify if the association had Citizens as their carrier? This has been clarified so that that is not going to be an issue. So again, living at ground zero with 87,000 impacted condos, that's good news for me. And many of you have that in HOAs. So just realize that was something that worked out in the homeowner's favor. The other things, this is really not about insurance, though I think insurability is going to be coming up around it, but I just want to make you aware is that the milestone and the structural reports that were part of the new legislation last year have now become a 3-day right of rescission requirement, just like all the other condo docs. So again, if I am helping a buyer in today's world, I always ask in my offer, I want to see the 12 months of agendas and minutes, because while the structural and the milestone reports may not be done yet, I'll get a good idea of what they're talking about fixing. And then when I look at that budget, it's going to help. So I want a buyer to have all that information. Again, I keep all that stuff in a record. And then for sellers, if you're helping them, you need to let them know this is going to be required. It is required. And that, so again, making sure that they're getting that information, because if you're not on the board, oftentimes you really don't have an idea. So, and then finally, I know the attorney that has helped our office kind of navigate through this has suggested in many of these things, sending a follow-up email that even if they've signed a disclosure saying they understand about the condo coming, that just says, hey, we understand it one more time, because some people will say, I docu-signed, I really didn't know. And again, we just don't want to really put ourselves in a position. I know in my area in Pinellas County, the reports that have come back so far, the smallest assessment I've seen is $60,000 and the highest is $200,000. So I'm predicting that there may be some lawsuits and I don't want to put myself in a position to be having to deal with any of them with future clients or past clients. So again, I think you've got the opportunity to just share good news about the flood insurance requirements and then again, understanding, for me, the people with condos, they either need to figure out about selling now or hold their peace for 5 years, in my opinion, because when this stuff starts coming, the insurability, the financeability, et cetera. But the reality is, if you're sharing with them, hey, some laws have changed and there's going to be these mandatory documents. So again, just to make you aware, you're going to want to keep those as your association starts sending them. It's just a way to have that conversation and keep them posted. And then if they're like, hey, I'm thinking about selling, those are conversations, you know, that you're going to have as you're sitting there talking about the future. I sat down with a past client yesterday who has a condo and it's in a 2-story building, but they don't want to be, you know, they are concerned about the future and they feel like now is the right time to make a move. So again, those conversations came out of keeping people informed. And again, I think there's an opportunity for those of us that do that to be at the table with people, helping them through this process. So I got through it, Madam President Charmaine. And that was a whirlwind. I'll be able to answer questions. What I want to say is, first of all, in the chat for me, tell me if you feel like you got at least $25 worth of value today from that. And, you know, again, your RPAC dollars working for you. Anybody that's not, I would ask you to highly look at becoming part of the team with us. You see the work we're doing. You see it both from Women's Council, Florida Realtors, NAR, and all of that takes, you know, money for a seat at the table, as well as doing like we're doing today, which is educating each other. Because in educating you, my hope is that you will educate your clients, because they have a voice with our legislatures. I mean, we can say whatever, but at the end of the day, they also need to help voice whatever their concerns are. And so we need you. In addition, we will be having in the links that go out, I've put together about 30 different social media things that you can customize to yourself, to your sphere, from video scripts to Facebook posts to photos. So again, my hope and help is that this helps you take what we've talked about today and put it into action. I know it was a lot. I hope y'all kept up with me. And now I'll pause for any questions.
Cyndee, there were a couple in the chat. One
Okay.
question was, does the MySafe homes, would it apply to condos or manufactured or mobile homes?
I don't believe so. But if you go to that link, they will specifically say all of that.
All right, and there was another one. I've just lost it. I don't know why I lost the chat somehow. Catherine, did you see that other?
Yeah,
Probably me. I was asking about, you know, a lot of the insurance companies are raising our rates because our roofs are over 10 years old, but like I have a tile roof, which is not at all the same as a shingle roof. So I'm not sure why there's not being a distinction made there, you know, on giving discounts for people with tile, you know, versus shingle.
So Leanne, my understanding with that law is, first of all, 10 years should no longer be an issue. And it is 15 years is where the law is put a stake in the ground. I think like you, I have some concerns about tile, metal, all these things that supposedly last longer. There is no mechanism past the 15-year without an independent inspector with 5 years. And again, what I don't have complete clarity on myself is that the insurance company's inspector, or can I get my own inspector? So I think we're still working it out. I think it's an excellent question. And I think it's the kind of thing, again, that if you're running into anything else, please forward it to me, because again, as Florida Realtors gets ready for next year, we're working with people, we need to communicate real issues that are happening, you know, especially unintended consequences.
Cyndee, there's another question here. The Citizens is making unannounced house visits. This person had 2 clients tell them that they are required for more information, asking for more information. Is this a new normal practice? Unannounced house visits by Citizens.
I'm not an insurance agent and I do not work for Citizens, and I'm not even taking that bait. However, I think that I have also heard that people have a policy, and again, it's been common practice for the last few years to have people go out and double check, especially on roofs with the cameras and everything. And again, I think we're going to be having that while we go through the, you know, getting through legitimate claims and issues versus fraud and stuff. So, yeah, I don't have any information in more detail about that.
There's another question here from Francis that you touched briefly, but go over again when selling a condo, what's the flood policy? We need to make sure that the condo has to, I can't figure out all that she's saying here. The condo has to make sure. I think what she's talking about is the statement you made that now if the condominium has a blanket flood insurance policy, the individual owner does not have to carry one. And say that again.
Yeah, yeah. So I also we are lucky and fortunate to have the NAR staff member that works with me on the our insurance committee, Austin Perez, and he said that they are making the house visits. And again, the condo area right now, I don't have a definitive answer. His answer is it's definitely anyway, we're still figuring that out, because what I don't know is, and it seems like in my own condo, we're in renewal period, so I'll know. But, you know, a lot of condos do not have any contents. They have building, the 250 building, they don't have content. So how citizens will, you know, again, accept it. I think my understanding is they do, but again, I'm not an expert, and I could certainly follow up with Trey Goldman at Florida Realtors and find out.
Well, I can tell you that I have State Farm insurance on my rental properties. And, you know, they made an unannounced visit to one of the rental properties and didn't like the way the guy was keeping the shrubs and wanted them cut back from the house and lowered. So I will tell you this is happening. And, you know, I'm thinking, don't they have something better to do? But it's not just about your roof. They're looking at the overall condition of the property. And, you know, so I had to call the tenant and tell him, you know, cut the shrubs back and lower them and whatever. So just want you to be aware, it's not just citizens doing this. We're going to expect to see this from all these companies. Question on the
Yeah, Alexis, let me just add one more is on that is that God, I was just it was right there. I was gonna go ahead. I'm sorry. I had a thought on it. I mean, I'd lost it.
on the
Apologize.
My Safe Homes to clarify how they can get paid back. So they go out, let's say they put in new windows. I'll just throw that out there. You're saying if it costs $15,000 for new windows, I'm just going to use that number, and you pay $15,000, the state's going to give you $10,000 of that.
That is my understanding.
There's a limit on how much the state's going to pay, which is $10,000.
True. So if it was 20,000 that you wanted to do, they would still only pay up to 10,000, Alexis. Like, nice distinction. If you had a roof that was 20, they would still pay up to 10 if it qualified. Yes.
Yes, and I just wanted to make sure that was clear to everybody. I think we have some hands up. Nancy has her hand up, and then Rebecca.
Thank you. And Cyndee, great information. Thank you so much.
You're
Running back to the Safe Home program. Do you have to have your insurance company reach out to you first, or can you just go online and apply?
No, it's definitely consumer oriented. And actually, I know people that have already applied. So, I mean, I've got clients in the wings. The key there is you want to get people in there early, because there's $100 million when it's gone. You know, I guess we wait till next year.
Okay, so this is something that I can share with I farm my neighborhood of 389 homes, all built in the 90s.
Yeah.
Okay.
And after today, I put together some Canva templates, and you can make it your own. I put some scripts, I put Facebook posts. So our intent, President Charmaine and the education, our intent that I'm part of is we want to give it to you to use, to make you the hero, to make you make more money. That's so absolutely. It's all there for you to make your own.
Thank you so much.
Yeah, absolutely.
Nancy, I was just going to add, I did it personally, and it's online, and it's a very easy process.
Well, I'll be
put in
doing
your
it to my house.
application, They
I need
contact
those.
you.
Excuse me. Let's hear from Rebecca.
Yeah.
Thank you so much, Cyndee. Oh my God, that was amazing. Insurance is like Chinese to me, and I think you just made it understandable. So I want to thank you so much for sharing For real, like I die when it comes to insurance, and I've been doing real estate for 20 years. But thank you very much. One of the things that has not been clear with all the new laws and adoptions that are coming in is every home in the state of Florida going to be required to have flood insurance, or are they coming out with like a new zone map, or how is this going to be dictated throughout the FEMA map? Like how are we going to know what specific homes are going to need that flood insurance?
So, great question. The maps are in most places have been updated. That's right now, that part's not changing. So what that means is the special flood hazard area and what those homes have the 50% boundaries that we talked about, that rule applies to them.
Oh,
I think we have a little glitch.
I think she's
She's stuck.
maybe her Wi-Fi.
Then you look at places.
Yeah, you
is
got
it-
stuck there, Cyndee.
Oh.
You got stuck at the 50%, and then
Okay.
it got stuck for about 30-40 seconds.
Okay, so right now, I would say in your mind, nothing is changing with maps. Let's just put that off the table. It may or may not, but that's not what we're talking about. But what we've seen is instead of maps, Citizens has said that they are going to require it with anybody, anywhere, including people that don't have a mortgage. So if you have a client with a paid off house that has homeowners with Citizens, to keep it, they will have to have flood. So again, there's a lot of conversation about is mapping accurate, not accurate, but at the end of the day, you can look at your flood quote price, know if it's higher and the maps were updated better, you'd probably be in it, which would mean you'd be limited on your improvements with the 50% rule. So at the end of the day, the flood insurance is kind of the equalizer to sort of protect across all the areas that we're seeing it. Other insurance companies have not yet modeled after Citizens, so we'll see what happens. But right now, 1.3 million plus people that carry Citizens will be over the next 4 years phased into having NFIP flood policy or private. One other distinction, and Austin, text me if not. If you go with private flood, you have to insure to the value of the insurance. So let me just be clear on that. So if I have a $500,000 house and I have private flood, I'm going to have it insured at $500,000. In FEMA, it's only the max is $250,000 and $100,000 for contents. So just understand that also with private, there's some other things that could end up costing you more because you have to cover the true cost.
So just to make sure I have this right and to clarify, if there's no state law that mandates flood insurance, this is something that is coming out of Citizens for people that specifically have Citizens to make sure that if they have Citizens policies now, they're going to come into that phase program where they're going to be then required to get some kind of flood insurance, regardless if they're in the flood zone or not. Am I understanding correct?
Perfectly. Yes, ma'am.
Okay. That's what I wanted to make sure. You've clarified everything. Again, thank you for all your help and your training today. It's been great.
Perfect. Thank you for being here.
So we had another couple of hands up. Natalie, did I call on you? I see no hand up now. And then Ariana had a hand up, and I don't know if she's still on here and has a question.
Yes, I'm here.
Okay.
Cyndee, you did fantastic. I'm an insurance agent, so I was wowed by you because you nailed every single question. Regarding inspections, yes, I do with all of my clients. I tell all of my clients there will be an inspector out to your home to inspect the exterior of the home. They do come unannounced. But I do tell all of my clients, if you see an inspector out of your house, they're there to inspect the exterior. And yes, if the yard and the trees have to be cut back, if the yard is a mess, all of that will be sent to our attention to talk to our clients. But yes, they do come unannounced. But I do tell my clients that there will be an inspector out in the home.
Is there anyone else who had their hand up that I didn't see that we didn't call on? Because now would be the time to speak. Any other questions that I may have missed in the chat?
Alexis, I thought about I thought about what I forgot that I was when,
Okay.
so, and you might be able, Ariana, to talk to this, but I was told by an insurance agent recently, I just share this because again, I think just like people only buy a house every so often, I don't think anybody tells consumers how to be smart insurance covered consumers. So they were saying to me that if you call your insurance company and you say, hey, do you cover if a window breaks? That is registered as a claim on the property with a zero value. If you call with another question and you have two requests, then you have 2 0 claims, you didn't really even have a claim, then people have told me they got canceled for too many claims. So again, you want to be working with an agent directly and ask those questions and use them as just like people use us as a realtor, as the trusted advisor, and ask them questions. But anyway, that is something that that I wasn't aware of. And they explained, like, again, so sometimes we have clients that are like super, you know how they are, they want to ask you tons of questions and they might be shooting themselves in the foot unintentionally. So I just wanted to bring that up.
You are right. And I tell all of my clients, never call your insurance company unless you're making a claim. Always call the agent and ask everything you need to ask. And if you need something checked on your policy, let them do it. Don't you call the insurance company to do that. So you are correct on that, Cyndee. I've seen that happen already. So not being any other questions.
I do. Alexis, I need clarity on something.
Oh, okay, you did pop up. Go ahead.
Yeah, my signal, I'm out of the country and my signal is acting up, so I apologize. Clarity on the 50% increase. So is that a yearly up to 50% increase after what year you said? After the end of this year, or was it next year for non-primary properties? Can you hear me?
Oh, yes, for citizens. Okay. So as of November 1st, 2023, in a few months, when those renewals go in that next cycle, anybody with citizens that is second home, short-term rental, et cetera, can expect up to 50% increase. Now, I don't know if that's 1 year or, yeah, I don't know, but if how many times can you take it and still be there? I don't know. My personal gut, I mean, again, this is just Cyndee Haydon spitballing. I think that part of the challenge is this: citizens' rates are 40% less than all the other companies because it's state run and the state has not let them increase to the CRU actuarial rate because they're trying to keep us in our houses for primary. So what they're saying is, hey, if we take citizens and we take everybody that it's not your primary, this is where you live, it's an investment, it's a second home, then with 50%, other insurance companies could compete and they would be better covered. I mean, honestly, my insurance agent says if you have someone besides citizens, you probably have better coverage. So it's a good thing for those homeowners. But I think that's what again, nobody has sworn to me, but my gut is that it's there between the 50% and 20% more. There's going to be a company that's going to take you, which means that us, the taxpayer, don't have that financial liability on the books. That's what I think.
All right. Thank you very much. I want to wrap it up. We're running a little bit over time, but I think the information was valuable enough to hold it. I want to again say there's a lot of you on here I see that I don't recognize as Women's Council members. Beata has put our state liaison, who I forgot to recognize before, has put in the chat group. Go to wcr.org and join our Women's Council for more of these sessions. Also, I would encourage you again to make your at least minimum donation to RPAC. I'm a little more brazen than Cyndee. I'd say this session was worth you signing up and making your business plan to put in $1,000 a year and be at the lower level there on your major investor scale. And I think anybody can, pay $100 a month, put that in your budget and budget for the year. And if anybody hasn't paid their dues yet, I'm going to say I'm running for RPAC Queen in Pensacola. You can make your donation here, and I get credit for your money and you get credit for your money at RPAC. So Charmaine's gonna kill me for that, but it's okay.
Well, just tell him, Alexis, that I'm trying, that I have to give my job so that Charmaine keeps me. So see, if y'all don't support our pack, she's gonna be like, this isn't just for good. So help me be get my performance review from Charmaine that says that I get to keep my job, because I love doing this.
Cyndee, I think you're good enough and our education's good enough that I'm gonna change my donation this year. Instead of Crystal, I'm going up to the $5,000 mark. So I think everybody ought to increase theirs, and the ones who aren't should absolutely join RPAC. I can't thank all of you enough for attending. We have some people like Nellie from overseas there who are on this today. This has been an extremely valuable session. And I'm going to turn it over. Hold on, Ms. Charmaine. I'm going to turn it over to Ms. Charmaine to say whatever she wants to say.
Yes. Oh, can you hear me? I'm losing service again. Thank you guys very much. Natalie, I can see you. I know you said you were overseas and you were going to try and join us. So thank you very much. And I know there's someone else here from Canada. But that's just showing you the power of Women Council when we get together, how we can bring you these great education information. And I'd also like to invite you all, if you're not a Women Council member, or if you're a Women Council member and you have never been to one of our conferences, we have conference in August. Florida Realtors and Women Council. I think our conference starts on the 13th of August to the 16th or 15th, and Florida Realtors continue to the 20th or 21st. But you can get more information about the conference, and trust me, this is a conference you want to be at. We are not only going to provide you with education, but we're going to have fun. We have a lip sync contest coming, Battle of the Networks. All the networks are coming together to outdo each other and dress in your best 80s, 90s outfit and just come and have fun, learn more to earn more, and have fun while we learn. So thank you everyone for coming. Alexis, back over to you.
Thank you. We also have on the 14th, a top producer education panel. And we're going to talk about working in a tough market here and how to get through this. We're also going to talk a little bit about creative ways to get more listings. And so we have people on this panel that, you know, are doing 90 and 100 million turn GCI. I'm sorry, whatever it is, you know what I'm talking about in transactions. And also there's a class on AI coming up on Tuesday. And if you don't have your PMN designation, our Debbie Z is going to be teaching the PMN class on the 13th, and there is still time to get signed up. Again, I thank all of you for joining us. I thank Catherine and the rest of our education team. I thank our state leadership team for all of their help and support, because it hasn't been easy to work with me this year on these education things, and they have been very patient. So thank you all, and we'll see you at least perhaps in August, and then we'll put word out on the next Learn More to Earn More series.
Great session, guys. Thank you.
Bye, everyone. Thank you.